Hey party people, welcome back to my stream. Today we are going to continue our recovery. Before I start here, let me get these disclosures up. Okay. Hope everybody's having a good day today. So I'm not a professional trader. I have no idea what I'm doing, and I'm not liable. Don't copy me. Always got to start with that stuff, right? Okay, let's get going here. The market's going to open in a couple minutes. So I will share my actual screen and what I do to get going. I think one of the first things I want to say here is I know. There we go. I'm sure that my method is not clear. What I do is very simple, although it is not easy to, what would you say? It's very simple in principle, but very difficult to execute. To execute well. So all I'm doing is selling. I'm only doing one thing. I'm selling options on the SPX. And those options can be puts or calls. That's simple. I can sell $100,000 of them today, no problem. The real trick is selling those options while minimizing the risk, and that's right. It's don't lose money is really the goal here. It's easy to make the money. It's hard to keep the money and not lose it. So all I am doing again is selling options on the SPX. So I'm going to get started here in a second. Let me check that I really am streaming by going over to my other computer here. And again, all that I use to do this, the only charts or whatever, I use a chart of SPX on different time frames. That's it. So looks like I am live. Looks like that's working. Great. So yep. So I'm going to go over here. I have on my laptop here that I don't think you can see. You might be able to see in the reflection in the mirrors there. I have a chart of SPX. To begin here, I'm going to put that on a 3-minute, pretty granular, see how we open up. Okay. The first thing I do during the day, I look at my open positions. I sort by time, by days left. So I look at everything today. And if I look at everything today, it's basically all this stuff you can see on the screen right there. And I can see that I have, in terms of calls, I have two calls open. The open are the ones in negative, and then puts I have 1, 2, 3, 4, 5, 6, 7, 8. So it would seem skewed that I don't want the market to go down, but actually I do, because the calls are all in the money. The puts are not, right? I want it to end. I want it to end somewhere between there, or make it end somewhere between my highest put 74.75 and my lowest call. Again, these are the ones that I sold, the negative ones, of 72.40, right? So I want to end between 72.40. I should say I actually don't want to end between there, because these are overlapping right now. I'll explain that sometime in the future. But for the put side, I want it to end below 74.75, above 74.75. For the call side, I want it to end below 74.20. So there's a conundrum there. And what I'm going to try to do during the day is move those calls, to a higher price, and I'm going to try to protect myself on the puts in necessity, just get rid of them and or protect them or move them to a lower price. That's my strategy in a nutshell, and you really got to see it to do it. So right now it looks like we are going to open quickly. Those are the calls that I've sold, and then these are the puts that I've sold. The reds are the ones, I guess you could say, in the danger zone. So I can already see that I'm going to try to move some of these. These are my protective puts. I want those to be closer to the ones that I've sold and decrease the width, because that protects me from a greater loss. It looks like we're open. No, we're not open yet. So I'm going to sell one of these because I own it. It's green. And I'm going to buy one of these. And I'm going to do a limit debit, see if I can get it for 20 cents. And I set these up before the market because if I get them, great. And then if I don't get the price I want, then I can increase the price that I'll pay. So these are the prices that I'll pay, because I don't know where we're really going to open. I have two of these, so I'm going to sell two and see if I can buy two at 30 cents there. So if the market goes up on the open, I have a better chance of these filling. If it goes down, then I have to increase my price or just wait till later in the day or figure out what I'm going to do. Okay. So these are kind of my housekeeping before it starts. I'll do this on the call side too, but there's nothing I can really do that makes a lot of sense to me right now. So this guy, I could sell this one and buy this one for like 10 or 15 cents, right? That one's $1.80 mark, and that one's $1.65, at least in pre-market with what's traded so far. But then I would leave a gap, right, to protect me from this guy and these guys. So this one, this protective put here covers these here. Well, it covers one of those, right? And then the next, if I go, that one covers it, and then that one covers it, those three. So I wouldn't take one of those three and use it to close out that. Okay, I'll actually skip this here, skip the negative. Okay, we're going down, we're open. So sell one and buy one. Okay, you can see I'm already getting fills here on some of these. I have to work really quick here, so I'm not going to go over what, but we're dropping at the open. So ideally, if I had calls that were out of the money, even if the protected ones were out of the money, I would move these up, right? But they're still, even my protected ones are worth about $100 right now. And my negatives are 250 and 279. So I can't do much there. I'll probably just end up rolling those before the end of the day. But I can try, one thing I can try to do is I can try moving them up. So I'm going to buy one of those. I'm going to sell one of those are the same strike price on the associated ones. Sell one of those, okay? And see if I can roll this up. I always like to, so that means I would sell, I would buy a negative, sell a positive, then I'm going to sell another one to create a negative and buy another one to protect that. So you see, if I put in the same values here, if anybody ever can understand this and figure out exactly my method, that would be amazing. I know it's not easy. Ooh, we're going down a lot, so I want to probably go sell some puts here. But real quick, if I move this up by 10 points on each of these, so I keep the width the same, I can do that for $1.50. If I move it up a lot more, it costs me too much. I don't want to do that. We're dropping like a rock here. Let me see if I actually go to dropping on the open. So I may sell some puts, but I've got too many already for today. So, and I think tomorrow I'm kind of overloaded on them. 1, 2, 3, 4. Yeah, what the hell? Let's sell one. So let's make some money here. And I'm see if any of these are close to being able to roll, like that one is. So I'll modify that. And we'll go 25 cents just so we get it. So that's rolling some of the protection up. That would decrease my potential loss by 2,000. So that's what that just did. Okay. And modify. We'll do the same thing here. So see how quick this is? I can just pay 5 more cents, and should get filled on that one in a second. Okay. In the meantime here, ideally, I would like to sell puts below where I had sold the calls, right? So I create this gap. But right now, like I said, they're overlapping, meaning the ones that are in danger are way down here, the calls, and the puts are way up here. I would really want it the other way. This is not good. This is the situation I'm trying to get out of. But I like 7,400. I don't think we're going to get below that by tomorrow. So I'm selling a 7,400 and I'm buying. I like to stay about 175, 200 max away. Maybe spend like $2, dollar or two on the protective call. I like this 72.40 here, so I'm going to buy one of those. And I'm going to ask, in case we keep falling, I'm going to ask 790. I'm going to ask 765. I think that's realistic. I think I'll get that. Okay, so I get $762 for that one. Okay, we'll just let things chill here for a second. I know nobody's watching. That's all right. I'm getting practice on how to do this on YouTube, and this will be here. Like I said, the main reason why I am doing this at this point is because, I'm in right now, my loss isn't as big as it was a month or two ago, or even last week. But if we look here, my loss actual, and I don't know what the difference between the net trading gain and the taxable gain is. I don't know why there's 3 of these. We're looking at we'll go with the middle, right? Somewhere around $125,000 right now. And you can see I just rolled some more puts. Okay. So I'm showing how I can recover from this. And I'm doing it now, not after the fact. So people don't say, well, you posted these, right? If I recorded them and posted them in the future, they'd say, well, you just did that because you gained. No, I want to show you live that I'm confident I will gain all that back and more, and in a period of weeks to months. So it'll take a while, but this is my method and it works. We can see, yesterday we started with our count value right around the same. I think it was 140.15. So we're still about the same there. Cash is about the same, 351,000. And let's see, do I have any realized gains yet today? So if we look at today's trading gain, so with what I've rolled and closed and everything, and it's weird how it calculates it. You can't really say I made this amount of money. I could even change today's trading gain, $28. I think that's if I close now, it's down. But my realized gain from today, negative $222, and that's just from the selling the protective puts and calls and the movement in the value of the option. Options that I've rolled, right? Because it's closed. So, anyways, we're doing good here. I should say we're doing fine. We're stable. Looks like the market's moved up a little bit. I'm going to go to the 1 minute on the SPX. I like to use the 1 minute in the beginning to see if we get any trends. Here, I'll bring it up here. So, Nice. All I have to do, let me see if that works. What if I click on this and then that? Do you guys see that? No. Okay. Stop sharing. So I want to share that one, which I know it's going to do that at first. Infinite weirdness. So we're on the hourly here. First of all, let's take an hourly view. You know, we had a huge gap up yesterday, and the hourly doesn't tell me much with that. So I'm gonna go out to the daily. What's going on here? Yeah, huge gap up on the daily. We haven't gone to new higher high. We did create a new lower low. So until we create a higher high, we're possibly starting a downtrend on the daily. I would say my bias is that we're going to go down, so I need to be careful to not sell puts too close, and that should help my calls get closer to being out of the money. 1 hour. So if we go to the hourly, any insights from this? We've been trading sideways for the last couple days, and if we break below, so like I said, all I use is a chart. I do just minor technical analysis. I only do this on the SPX, and that's because I can specialize in it, right? If I were trying to do this on a bunch of different things, it'd be insane. And the SPX has the most liquidity, and it's just and European style options. So if we break on the hourly, see what we have on this side over here. We'll just, if we break down below this on the hourly and close, we're probably headed down more, because look at that. Support, 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 break, support, boom, try to get back up to it, didn't succeed. We came right up to it, right? We gapped up right above it, came back down, we bounced off it. That looks good for a continuation upward, and now we're back down. So let's see what this looks like on the 3 minute real quick. Looking very negative. And on the 1 minute, I see it's trying to hold that. Now, people might say, well, if you can read charts so good, why don't you just like day trade? Well, I could day trade this, but with that, I have to get the direction right? If it moves 1 cent away from the direction I want it to, I'm losing or gaining money. When I sell these puts, I can sell them way up here, way down. So I can sell calls way up here. I can sell puts way down here, and that way, I don't have to guess right. It can go either direction, and I don't lose money unless it goes above the calls I sold or below the puts. And for a long time, I did that on with 0 DTE options, and it works great. Except every 2-3 weeks, every month, I'd have a huge loss, and it would wipe out all my gains and take me a while to gain it back. And finally, I had a day like that wiped out a ton. I would have had a huge loss if I just let those close. I had a rule that I wouldn't roll, because I always get in trouble when I roll them to the future. But I said, I'm not going to lose. My account was like 290,000 at that point. I said, I'm not, and I think I would have lost 20 or 30,000, not too much, but a bit. And it would have taken me a couple of weeks to get that back. I was like, screw that. I'm going to figure out. Well, I'm going to get this money back. And also, I kind of got tired of sitting in front of the computer 8 hours a day, my back hurting, doing that trading, because every millisecond counts. I'd have to make transactions quick. So by moving to something where it's more long-term, seconds still can count if the market does something, makes a big move or even a moderate move. But I can go out for a walk. I can go. Oh, this is good. We just had put. Those are all rolls. Okay, that's because the price is going up. So that makes the protective puts cheaper to roll. So I got those. Anyways, I want to be able to not sit in front of the computer all day. Originally, when I was doing the zero DT stuff for months, for over a year, I just did it on my phone. I could be at a bar, a restaurant, a movie, and do it. Okay, we got more. So roll some more. Okay. And it was fine. And I'd make a couple $100 a day most days, maybe some days a couple thousand. And I had a life, but then my friend came and I spent like, he wanted to learn, and I spent like a month and a half trying to teach him. And I started doing it all night, and then I just got in the habit of doing it all night. And then I started making $3,000, $4,000, $5,000, $6,000 some days, but I'd have to sit in front of the computer constantly. And so I'm trying to, and I will, by changing to longer term expirations, more than a day. As soon as I get out of this mess I got myself in, I will be able to just, spend half hour, and then go do my thing. I can do it on my phone too, but it's lately it's been a little too intense. But I'll get to a point where I'm comfortable, or I don't have so many irons in the fire, and I can do it on my phone again. Anyways, we're moving up. Let's see if we can roll some more stuff. So let's go share. Wish there was a way to just stop sharing, just go and share the other one. So we're going to go back here. We had a bunch of stuff, roll here while we were sitting here. I've only got one order in there left, so that's great. I reduced risk by probably $30,000 or $40,000. On the put side, the call side, my risk is the same, and risk is defined as the difference between the protective call or put and the liability, or the one I've sold. Well, actually, I have 3 calls there. I've got to do something by the end of the day, or else I lose a lot of money, like $60,000, $70,000. So I'll take care of those. But we're moving up. As we move up, my protective puts become cheaper. Oh, that was tomorrow. That's why I had 3, because I thought I only had 2 on the calls. Yeah. So let's see. If I don't do something with these, I have a width 74.20 to 72.70, 150, so $15,000 there, and 74.20 to 72.40, 20, so $20,000 there. So I'd lose $37,000 if I don't do something with those guys. Anyways, it's looking like I can really start rolling. I can roll some of these puts way up and reduce my risk, because we're flying high. SPX is flying up higher, and we can see it right there. We just gapped up on the 1 minute. Holy crap. Okay, let's get this done. I'm going to sell one of those and buy one of those. 73.70. Actually, it goes 73.75, and we'll put that one in for 25 cents. We'll take this guy, we'll sell one of these, and see, I look at the put mark price, it's at 57.5 cents, and see how much I want to spend. I want to spend about usually $15 to $35. So we're going to put that one in at mark price 20. It should hit right away. And then we'll do next one. Sell. There's 2 of these here. So sell 2 of those. 65 cents. I'll do 20 cents here. Sell 2, buy 2, 20 cents. You can see we've filled everything so far that we had done previously. But there's 4 of these. I don't want to roll 2. Just because I may be able to roll for a better price later, but I want to at least get something, roll this up. Well, it's a good thing. It's 25 cents. well, it's potentially good. See, we're dropping again. We're dropping again now. So I want to get these done as quickly as possible. See, and now our greens are getting close to our reds, closer and closer. We're minimizing risk every time we do this. See how many do I have that? I mean, these are pretty close. We could easily fall that much today. And I have four of those. So I want to get at least four of these really close. It's expensive to roll that even a little bit. So we're gonna come back up here. So one of these. Buy one of these. 35 cents. Okay, I'm gonna we'll put one in here just in case it hits later. Sell one of these. So we got some more that are rolling. Buy one. I always like to at least go 10 on the width. 15 or 20, 30, 25, 30 is even better, but it depends on the price. I'll go 30 cents on that. Actually 25 for later in the day and see if we get that. Okay, so I've done that. Not much I can do with the calls right now that I want to do, I should say. So we'll go to the next day, and since we're still kind of towards the high of the day here, although we dropped a bit. I'm looking at my other screen that you can't see here. So we'll roll some of these up if it makes sense. Usually if they're above, $1.50 or so, it gets pretty expensive to roll them because they become more exponentially or increasingly more valuable as you get closer to the strike price, right? Meaning you may have a 5-cent spread between these, and then when you start getting close to the strike price, now you can see we have a 10-cent spread, right? Now we have 15% spread, and now we're up to 20-cent spread. So it becomes more expensive to roll those. But we'll put one in here just for the heck of it. Let me see how many puts I actually have. I have 1, 2, 3, 4. I have 4, and I have protected puts. I have 2, 3, 4. So they're even. So all of them really matter. I'm gonna sell one. The reason why I'll frequently have multiples, especially if I can get them a good price, is because I could. Right now, I'm selling. If I were closing this out, for example, I could sell 2 to buy 1 to close, and that gives me, when I'm selling, I'm getting more. If I sell 2, I'm getting more money than if I sold 1. So it makes my loss or my. When I'm closing these out, I'm getting a gain. It makes my gain larger, essentially. Makes the amount I spend less, so my gain is larger. Yeah, that's the right way to say it. So if I roll those up by 15, that's not bad. 35, I'm going to take it. So I can roll it up by $2,000 for $35. So I rolled that one up. See, boop. And we'll do the same with this guy. 72.75. We'll sell one of those. Let's see what we can buy us. 72.90 and do that for 30 cents. Hell yeah. Good. So we rolled some of those up. Again, the calls are weighing the money, so we're not going to do anything there. And let's go. To next week. Friday is a holiday, so we're going 5 days out. They include weekends in it says 5 days, but that's really the third trading day from now. So I could roll some of these. Let me see if I want to. Okay, that's pretty far from strike price, so I'm not too worried about those, but we could easily fall. If we fall 1 or 2%, 1.5%, we could hit into those. So I'm probably not going to hit that one. That's 4 of them. I'm not worried about those, but I do want to move up at least two, to cover those. Even if it's just a little bit, because it gets expensive to do it on these out here. So we'll sell one of these guys, buy one of these. If we can get that for 40 cents, I'd be happy. That was one of the previous ones, not the one I just did. And then we're going to roll this one, sell one, buy one. That's more than I want to spend. Oh, that would actually close. I wouldn't want to do that because this guy here corresponds to one here, but I was going to use it to close that one out. We don't want to do that. That would increase my risk greatly. So I just rolled to 72.85. So I sell that one. I sell the 72.75. I buy the 72.85, and I get that for 30 cents. Possibly later in the day, I'd be very happy. Actually, let's do it for 35. That's more realistic, and I'll likely get it soon. Just to lock that in. Okay, market's starting to drop now. Still close to the high of the day, but right, we're in this channel. I don't know how to draw these E-Trade charts. I just want to do a line and see if this works. So I think the big support is right there. Don't like that color. How can we change that? Make it magenta. Clone it. Just going to mark a high of day. As you can see, it was some kind of support here. So now it's become resistance, not as strong as this bottom one. Remember this bottom one, if we go to we go out to, let's do an hourly chart. We can see that has some that was, I remember when I did it on a shorter time frame, you could really see that was some big support and resistance. Those lines are too thin, aren't they? I want to go back to the 1 minute though. Perfecto. Let's make those lines wider. Ooh, I like that. The color's not great. So the color's not great. So we're going to make these not magenta, but I always like green. Green's too bright. There we go. I'm sure there's a better way to do this, everyone. I've never really used these charts before, but since I can show them without having to unshare and reshare, it's better. Okay. So if we continue to drop, if we get down to, remember yesterday I said if we get down to kind of near low a day, then I'd have a put that filled. Well, we'd have the same thing with the earlier put I filled for like, I think for $700-ish or something. So if we get down here, we'll fill that. Or I could adjust it to take less money, but we'll see. So we're looking for that. Let's go look at that guy. That was $765. So because we've moved up, right now I can only get $640 for it. I'm asking $765. So as we drop, okay, the market's dropping right now. Drop, drop, drop. the amount we can get will increase. Okay. So we came back up a little bit, so that decreased. Just dropped, so that should go up to 650 or 655. Dropped again. So she got 675, 685. Should be if we drop. Okay, we just dropped again. We definitely should be over $7. Let's see here. Remember I said if we get okay, so we got to the bottom here, and we were at the bottom last time. I'm not sure when I entered that order, but we were close to that filling. But I put it $5 or $10 above where it would fill. So now we should be really close to filling. Yeah, 705. We need to drop some more. I may have entered it and we were like down here more, but with the time value of money, right? We've had like 15, 20 minutes pass since then. That means the option that I sell, I'm gonna get less money for it because there's less time, right? But I'll pay correspondingly less for the protective put, this one here, but not in a percentage, not the same amount less that they'll give that I can sell it for, right? These are both decaying, but the one close to the strike price is going to decay much faster than the one far away from the strike price. So let's see what happens here. We're above 705 again. Now I'm going to look how I make the decisions. Do I change this? Do I think we're going to go much lower soon? I mean, yeah, if we go much lower, if it's towards the end of the day, you know, the value is going to decay so much because this is one we're selling tomorrow. It's not going to decay like one that would today, but you know, the time value, I would get a lot less. So what are we going to do today? Boy, are we going to come back up and test? Okay. So I'm going to take a chance that we're either going to keep dropping or we're going to come back up and test and drop. So I'm going to leave the price the same for now. I'm going to go back to the 1 minute chart and learning how to use some new charts. Okay, we still have the green line there. We just gapped way below it. Okay, so let's see where this should be over. Well, 770 we could get 760. I'm asking 765. Now, just because that was the mark price, until it goes above it, right? It was at my 765. It is right now, but until it goes, I won't be guaranteed filled. So it just went above it. I got filled. So I just made $765. Okie dokie. And then if we go to tomorrow, we will see that I know which one it is because the price, right? The price is $960, $950, right? The reason I only made whatever that 675 was because I also sold a protective put. I think it's 72.90 or 72.80, right? So you minus that amount out of it, or actually I think I sold it 72.40. Yeah. So I'll immediately, if we start bouncing back up, probably above this line, I'll start looking at bringing this closer and decreasing the width, thus decreasing the amount of potential maximum loss. And I'll put that order in right now because you could bounce. Trump could tweet anytime, or they could sign a peace deal, or the opposite. Trump tweets are usually bad, is what I'm saying, for the market. Or he could treat something good, or we could have a peace deal, or we could have a nuclear bomb go off. You never know. So you want to have those orders in ahead of time for when those moves happen. So I'm going to move this up to 72.65. And right now, 45 cents, I'll ask 35 cents. And I'm going to put this in for all of these orders, but for something that I would get later in the day, potentially, especially if the market rises. Although I would prefer that the market falls, because that helps me with my calls more. So asking 40 cents, now 37.5. I want it for 35. Remember, you always multiply these prices times 100. Looks like I just got that one. So that one just moved up. Easier, quicker than I thought. Now, so, that gives you a lesson. You never know when they're going to fill, right? You never know which way the market's going to go. And maybe I should have, instead of paying $35 for it, I should have said I'll pay 30. Like this one here, right? I said I'll only pay 35, and currently the ask is 55. So maybe later in the day I'll get that. Maybe I should have either said I'll pay less, or I should have made the width more and asked the same and waited for that to fill later. But we'll try it again. I mean, with these little amounts, right, $5, $10, $15 here and there, I don't care at all. When you're doing 10 transactions a day that are making $500 to $1,500 each. And when I say make, there's also the protective things you're buying and the other losses. So not make total, but when I'm doing that many transactions, and have $15,000 new cash going into the account, I don't care about $10 here, $15 here, $20 there, right? Yeah, I spend probably $300 or $400 a day on those little things, but I don't care, right? You don't worry about the little stuff. Do not. We'll have 3 of those. So I'm actually going to leave. I'm just going to go to try and move those up to 7,300. 30 cents, we'll go 25. We just went to 25. I may get this again right now. And then we'll try rolling this guy too. Sell 1, go 73.10. We'll go 35 cents. Now we'll go 30 cents. Now we'll go 35. Okay, let's see what the market's doing. We're going up. That's why those are getting filled. So because those are going up, I want to see if I can roll some more of these. Trying to let these are for today. So I want to get these a lot closer to here. See if we can roll this guy. 2 of those, we'll sell 2. Buy 2. And we'll do that right now. It's at 37.5 cents. We'll do it at 30 cents. I must have an order for those in already. Or I'm rolling it to one. Yeah, or I have a negative. It's not letting me do that. So we're going to sell 2. I'm going to try going to 74.15. What the heck? It's a big jump. We'll go to 74.05. About 74. I can't go to 7,400. That would close that one out, and I don't want to do that. We're just going to let that one chill for a while, actually. Okay, what are we doing? Ooh, down again. So let's go make some more money. So I don't want to sell any more for today, do I? Man, I'd really like it to come down way down here, but I can't get anything to sell these puts. I already sold one for tomorrow. Let's see how many we have for tomorrow. I have quite a few. 1, 2, 3, 4. Not too bad. And if I could sell them way down here, which I could, I'd get a little money for those. That would make me happy. So when you go to farther out on a day, like I could go way down here and sell the 73.25 for $360. but I have to go, because it's a day out or 2 days out or 3 days out, the farther out it is, the more time value of money you have in those protective puts. So if I do, for example, if I'm going to sell that for $365 right now, if I go all the way down to 7,200, right? So I have a max loss there, or a width of 125 of 12,500. I only get $240. And the max width I would do is 200, and that's a lot of risk. That's $20,000, and I'm still only getting $270 for a $20,000 risk. I mean, 73.25 is pretty far away, but you get a 2 or 3% drop on a Trump tweet or something, and you hit that. So for that amount of money, I don't want to take that amount of risk right now. If I could do this for today and be at 73.25 and get that much money, right, I would do it. So let's go to 73.25 today, just to show you. So if I sell 73.25 here, just got a bunch more rolls on the 18th. Okay. And even if I go to, a 200 width, I only can get $25. Not worth it at all, right? So I'm just showing you the time value really makes a difference. So we're gonna go out 2 days. Let's see what the market's doing. We're going up, so I wouldn't want to sell any puts right now, but I'd want to. That's why those other puts we rolled filled. So we'll roll some more up. At least put the orders in for those. Okay. And like if we went way up on the day, these puts would lose a lot of money, and at that point, the price between these may become so low that I sell some of the protectives and buy call them the liabilities, the negatives, to close them out. And then if we then dropped after that, I could sell more at the same or similar or higher or lower prices depending on the market, whatever it does. So sometimes I'll do multiples a day like that. Let's see. If we go out 6 days, looks like I've got one, sell one, buy one. By the way, if a lot of times the numbers, the kind of increments of 25, 50, and 100, they're going to have a lot more open interest and volume. So they'll have more liquidity and you get better prices on them. So I'm going to sell one of these. So that's why going from 71.75 to 7,200, I'm probably going to get a more, not necessarily a better deal, but I'm going to get more efficient deal for my money. So I'll ask 60 cents for that one. And then these guys, there's 3 there. Oh, there's 2. Sell 2. We'll just try to roll them up a little bit. Buy 2. And we'll ask 50 cents for those in case we go way up. Actually, I don't feel good about that. 45 cents. We're really going to see if we can get a good deal. Okay, but let's make a little bit more money here. Are we headed down? No, but in case we dip down again, let's put in an order. I'm 6 days out, and if I look at my calls, this is very interesting. I have -3 here that are in the money, meaning each of those right now is worth about $9,000. So that's $27,000 negative. And protecting those, I have 3 of these at, we'll say $2,500. So $7,500. So that's how much I could get if I sold those. So again, I've got 27,000 minus 7,500. About 19,500, right, of potential loss there. But I can decrease that by rolling these up. And since these are out of the money, even though they're 6 days away, so you still got a lot of time value of money in there. But I think I had two, all three right there. Okay. But what I can do, I'm going to sell those, see if I can roll them up. Now, if these were closer to expiration, I'd get even a better price. Let's just see if I can roll them up two, because that would be $1,000 each. So times three, that would reduce my risk by $1,000, and so $3,000 total. And I could do that for about $400 each, so about $1,200. So I could reduce my risk by $3,000 by spending $1,200 right now. That's a pretty good deal. We'll put this in and see if we can get some more drops. I'm going to put this in at $350 each. So I spent $1,050. Okay, so that's something I can do on the call side. Yeah, we're going up. So this is where we're not overlapping or offsides, right? I want the price here on the 23rd, 6 days from now. I want it to close between 74.65 and 74.50. And if so, all these end at zero and I don't lose any money and I keep everything I sold them for. So this is more the position I want to be in. And I feel really comfortable then selling more puts down here, even that are pretty close to the strike price. So I'm going to sell a 74.10 and go down to 72.35. Okay, I get $1,430 for that right now, but I'm going to wait till we get a little drop. So let's see if we can get $1,495, so $1,495 for that guy. While I'm letting that one kind of cook here, we'll keep going down. That was a roll. Oh, the one that was here. 71.75 to 7,200. So for whatever I spent there, about $55, I think, I reduced my risk by 2,500. Good deal. Okay, can I do anything else on these other days? Let's see. The farthest I need to go out, well, I have ones on the 24th and 25th. So let's look at the 24th and 25th. We just rolled another one on the 18th. Okay. So again, we reduce risk. So if we go out to the 24th, I have a negative call there. Do I only have one? Holy crap. I have one. That's great. And where's my protective? There's my protective guys going the wrong way. Sometimes I get confused on the put and the call side. Okay. So we got one there. We don't have any puts here. So I'd be really happy if we got down here. So, but I could roll those down. So here we're going to do a 70. We're going to do a 73.95. Minus a 72.30. And we're going to ask, we're going to hope for a decent drop here. So let's change this. We'll go 7,400 and 7,200. We'll go the full. I'll go 7,210. Just to reduce the risk a little more. And we'll go 1,595. We could right now get $1,530. Actually, we'll go 1,575. $1,575 we'll try to make on that guy. Oh, I forgot today's FMOC. We could have huge drops or gains, so I need to be careful here. Huge drops more likely. Come on, why are you taking so long? Okay, we'll send that guy. Okay, he's entered. We need a drop to get that. And then we're going to go, we actually go down to the 25th. And we only have 2. Okay, so again, I'd be really happy getting something below here. So we'll put in a 73.50. And 71. 71.75. Actually, we'll wait till we get a. I want to see if these others fill. So the first one we put in, $1,420. I'm asking $1,495. Let's go look at the charts here. So we need to drop to about here. So you get filled. And that's just experience and intuition from years and years and years of doing this. So if we drop to about 75.20, we should get filled. While that's doing that, we'll go out. The last day I have is 25. Is that the one where no, I didn't enter anything there yet. Okay, those are looking good out here. Okay, for being able to do some sell some puts to balance out those calls. So I'm always scanning and looking for opportunities as things change or things I may have missed or new ideas I have. I think I might, for these tomorrow, I may be able to roll some of these up. Okay, so I just made $1,575. I sold the June 24th, 7,400. It's not really June 24th. Yeah, it is. So since I got that one, June 24th. So there it is. Pretty far away. And in case we go up a lot, I'll immediately see if I can. I just preemptively put these in so they're in. In case we move up a lot, I would want to move that up quite a bit. We'll say 65 cents there to decrease my risk by $2,000. Since I got filled on that one, I think we're going down. I'm going to increase what I want for this one here. It's made it 1,525. But as you can see, right earlier, I had said, I had mentioned, sometimes making, I have $10,000 or $15,000 cash come in these many days. And people say, no way, you're crazy. And at that point, I had only sold one for, I think, $765, right? $765. You can see how quickly these can add up. And we're only not even an hour into the day, right? And I'm already well over $2,000. If you take in what I've made and what I've spent, I'm around $2,000. And if I get one more of these right now, we'll be at 3,500. So it adds up quick. Again, at the end of the day, we'll go through it. I don't want to waste any more time, and I probably want to make coffee and concentrate on this a little more. I do a lot more trades when I'm on my own doing it, but we'll come and do a review at the end of the day. Before we leave, we'll look at where we're at. So overall, our account is worth about the same as when we ended yesterday. We've locked in realized gain. So we've locked in a $12,500 gain, but again, because of the movement in the portfolio, that's not yet reflected in the overall price. It will be as things decay or change depending on what else happens with the portfolio. Okay. And my cash, I've already increased that. I think we're at 351 something. We're at 353, 250. So I've increased that by about $2,000, like I had said earlier. That's how much cash has come in so far. So we'll see if we can get that over 355, maybe 356 by the end of the day. Okay. Thanks for watching. Talk to you later. Hasta la vista.